John, thank you so much for joining us on the Capital Raiser Show. I know that you have an extensive background in marketing, raising capital, in multifamily investing. I believe you have somewhere in the range of 700 units with a few different partners. We're really excited to have you on the show. Definitely like to have professionals like yourself. I'm learning this business myself, and I have about a bazillion questions for you. But why don't we go ahead and get started with a little bit about your background and how you got into multifamily and how you evolved in what you're currently doing.
Yes, my background is in marketing. I've worked for large corporations. I've worked for advertising agencies. So I spent 15 years developing marketing campaigns, really problem solving, figuring out what the marketing issue was. How do you drive awareness? How do you drive conversion? How do you build a brand? How do you change people's opinions for those who have a negative perception? So I spent 15 years kind of helping brands do that, working with influencers, working with celebrities, and all sorts of different personnel. And for me, the turning point really started around 2008 or so. I always had an interest in real estate, didn't quite know how to invest or where to get started. But at the time, I was working for General Motors. And if you remember 2008, you know that we ended up going into bankruptcy around that time. So, kind of a scary time period to be working in Detroit at General Motors. And at that time, I was a busy professional. I was really focused on my career working in corporate America. And I found myself asking myself a question to say, well, what happens if I lose my job? What will I do? How will I pay for things? Now, at that time, I didn't have a family, so it wasn't like the world was going to end, but I could only imagine for myself what it could have been like. And I actually saw people that I worked with who did have families, who did have medical reasons and things like that, where they lost their jobs and they didn't know where to turn. So for me, I think that moment crystallized the importance of having passive income, having another revenue stream where I wasn't solely reliant on my W 2 to provide for myself and my family. So at that moment, I kind of knew I wanted to start investing and figuring out what to do. Started to learn more about real estate, started to learn more about multifamily. I ended up moving in 2011 to Chicago, with one of the reasons being I wanted to invest in real estate. And I didn't feel like Detroit at that time was the best market to start investing. So started with a two-unit building in Chicago, did a house hack, lived in one unit, rented out the other unit. And we took that. We did really well. My wife and I, we bought a 3-unit building after that. We did really well. Bought an 8-unit building after that. Started getting into some flips. And I started running out of my own money. And it kind of became a constant thing. And ultimately, what I realized was that while I was building this portfolio, there were a lot of people kind of watching me, especially friends and family, and they had an interest in what we were doing. And I would tell them, hey, well, here's how you do it. You want to get an FHA loan, it's only 3.5% down. And I could watch their eyes kind of gloss over as I'm explaining how they could build their own real estate portfolios. And one of them said, well, look, that's really interesting, but what I'd really want is maybe I can partner with you or work with you on your next deal. At that moment, I realized that there was probably a demand for people who wanted to get the benefits of real estate investing, but didn't really want to become landlords. I mean, they've got busy lives. They're working more than 40 hours a week themselves. And when they're not working, they don't want to work more. They want to enjoy the time with their family. They want to travel the world. They want to do the things that they enjoy doing, not become a landlord and change toilets and deal with tenant issues. So at that moment, we started to say, well, listen, maybe there's something here where we can help each other, and we started to partner with other investors to invest in deals together.
So, how many partners and deals have you done so far? Tell us a little bit about your track record.
Yeah, so I mean, at that moment, we started doing larger apartment deals. The first one was 192 units out in San Antonio, Texas. We met an operator who we had a really good relationship with, and we were kind of trying to do our own deals for a while. And after looking at leading and executing our own deal for almost a year, we realized that hey, we've built up these great relationships with investors, and we knew some other people who were operating and looking to help raise capital for the deals, and just looking for help executing their deals. So we talked to one, and ultimately we decided to partner. He was a friend, and we found other things we could do as well to become a general partner. Whereas we're helping with marketing, we're helping with some market analysis stuff, investor relations, things like that. So we ended up joining him as a partner and becoming involved in that deal. So that started opening up that pathway for us. So I think we've done two, I'm sorry, thinking here. I want to say like 5 syndication deals. So around 700, I think we're up to around 850 doors or so right now.
Nice.
Five or six syndications. I'll have to actually count and figure it out, but five or six syndication deals around 850 doors, and continue to build the portfolio.
Are they all in Texas?
No, a good chunk are in Texas. I want to say around 450 are in Texas. We've got another 138 in Jacksonville, another 172 in South Carolina, 30 or so in Cincinnati market.
So there's a hotbed of where people are going to invest in multifamily, and at least for syndication that I've seen so far, which has been like Texas, a little bit of Oklahoma, but the southern corridor over to Florida in the Carolinas. Do you find that those are the hottest markets, or are you seeing some people go in different directions, or tertiary markets, or California, New York? What are you seeing? What do you like the best?
Well, I think when you're looking at a syndication, the first thing you're looking for is, where's the best opportunity, right? You're looking at stability, you're looking at growth. So when you think about growth, you're thinking about population growth and job growth. So if you just look at a US Census report as far as fastest growing states and cities and migration patterns, it's happening in the South and the Southeast in particular. So you're looking at Texas and Florida and the Carolinas, and even to a lesser extent, Alabama, Georgia, Mississippi. You're looking at those regions where they're seeing the most growth. So the reason investors are investing heavily in those areas are because the population is going there. Now, with that said, there's the thing that I think people are forgetting about is the law of supply and demand. And one thing you've got to be careful with is just because people are moving to Florida or they're moving to Texas, that doesn't mean that other people aren't reading the same data that you're reading. So developers see that too. And guess what they're doing? They're developing in Texas and Florida and the Carolinas and Atlanta. So you have to look at supply as well. So that's my one big caveat is you have to also pay attention to the amount of new supply that's coming onto the market, especially if you're playing close to that area. If you're buying Class A properties and there's a bunch of brand new Class A properties being developed in your area, well, guess what? They're going to have a better product than you're going to have, or you may be faced with concessions and you may not be able to execute your business plan. So there are other elements to it simply beyond just population growth and job growth. You have to factor in supply. You can look at what's happening from a multifamily standpoint. Are rents increasing? What are the vacancy rates in this area? And then overall, just how many jobs are here? What's the job diversification? Is it all one industry, or are there multiple industries that are going to support this economy? So you want to look at all of those things. Again, there's a ton of value in the Southeast region, lots of opportunities, but there's opportunities in the West Coast as well. You see Arizona right now is popping up pretty big. I actually really like a three-state area between Northern Kentucky, Southwest Ohio, in Indiana. That's where I'm at right now, and it's kind of a 2-hour drive for me. But there's a lot of growth in Indianapolis right now. It's the 14th largest city, and there's a ton of opportunity in a market like that. Northern Kentucky is seeing great growth, great stability, and the types of jobs are blue collar jobs where you see Amazon has just built up a huge hub. They invested $1.5 billion in a Cincinnati airport to build their own delivery hub there. So there's a lot of growth and a lot of blue collar jobs where you can come in and really, take over some of the existing product. And I think there's a demand and an appetite to create product and renovated product that renters are looking for that doesn't exist in today's climate.
John, you are so smooth, very, very articulate. Not to mention you have a pretty good understanding of the entire country in terms of what's going on with multifamily. That's very impressive, man. And so I understand you have a podcast as well. Tell us a little bit about it.
Yeah, the show's called Target Market Insights, and part of the reason I know so much about the country is I speak to guests twice a week now, and I get to pick their brains on what's happening across the country, how are they finding the best places to invest, what information are they looking for, what statistics are they looking at, how are they evaluating deals and opportunities. But it's not just the market research aspect. We're actually talking about marketing as well. So we talk to people about, how to build a brand, how to attract capital for deals, how to build your business as an entrepreneur, how to drive awareness, how to make a name for yourself. So we talk to some of the top experts across the country on a weekly basis, twice a week, and we deliver that information to our listeners. And a lot of our listeners are either real estate investors or entrepreneurs who are looking at ways to grow their business.
Yeah, let's talk a little bit further along that. In regards to, let's start with branding, and then I definitely want to talk about how you attract capital to your business and provide opportunities to people so that they invest with you. Let's start with the branding. You're a marketing, you have a marketing background, best said,
Mhm.
right? Tell us about, do you think that it's better to build your business brand, your personal brand, do it on social media, do it through other avenues, networking? What are the best practices?
I mean, I think one of the big things is people are going to do business with you, right? I mean, you can build your company and it can be whatever. And I learned this too, right? So you build your company, you can call it whatever, ABC Investing. No one knows what the hell ABC Investing is,
Yeah.
right? No one's just writing a check to ABC Investing. They're not. People are going to work with you, and then over time, ABC Investing can build a brand reputation based on the work that you've done to establish it, right? So I think that should you lead with the brand? Should you lead with yourself? I think ultimately you are going to be the primary thing that you need to get out there. Now, how you do that, there are lots of ways to do it, but ultimately they want to get to know you and they want to work with you. So I think that's the key takeaway. It can be through the business logo, but at the end of the day, they want to know who the hell's behind it, right? Who's the puppet behind this company? So I would say you definitely want to focus on yourself and building connections as an individual doing that. As far as where you should start, I mean, for me, I think the first thing you should do is figure out what value do you offer to other people. Too many times people look at themselves and what they want to gain out of it. Hey, our business does X. No one cares about you or your business. And I want to say that again and make sure your listeners understand that no one cares about you or your business. What they care about is how you or your business can help them. So when you think about your business, think about it from that perspective. Think about what you can do that benefits them. If you do that, that opens up the doors to conversations and communications. And now people want to understand more about you and your business and how you can help them, and you can articulate what those opportunities look like and what value you provide. So I think if you're building your business, don't build it from your perspective of what you do and all those things. Build it from their perspective as far as what do they need, what problems do they have, and how can you solve them?
Yeah, I was on a webinar with Dan Hanford the other day, and he said to approach it like this. He's like, "Do this with your head." Have you seen this? He's like, "What is this?" Like, this is an antenna that your investors have, and it's got a radar system that's always asking, "What's in it for me?" And I thought about that. I'm like, wow, that's an interesting way to approach life, or at least working with your investors. So definitely, I think I've heard from different marketing companies, always work on your personal brand, because if they like, know, and trust you, and then also believe that your ability within the deal is powerful, or at least that they trust that you're good in the deal, then they're more likely to invest with you. But obviously, they have to get something out of it. So in regards to raising capital, what are your some of your best practices? Is it more about, like, I had a gentleman on the show, Todd Dexheimer, who
Yeah.
kind of put my mindset in check, and he's like, you shouldn't be asking for money, you should be presenting an opportunity to people and sharing that with people.
Yes.
So I kind of had a paradigm shift a little bit there, and that was fantastic. But what do you think are some great ways to raise money for deals?
Man, so Todd's a good friend, and I couldn't echo any louder what he said. I think it's a phenomenal thing, and it does. It requires that paradigm shift. And for a lot of first-time capital raisers or new capital raisers, and this is regardless if it's multifamily or as an entrepreneur, if you're looking to attract capital for your business, a lot of times, again, you're looking at it from your perspective. You're looking at, I need to attract capital for my business, and that's the wrong perspective. What you need to be thinking about is what value can I provide for others and what can I get in return for that, right? So again, if you have an investment opportunity that's going to provide passive income, that's going to provide tax shelter, that's going to provide diversification, that's what you're serving up and offering. You're not raising capital and bringing capital to your deals. You're serving up something that provides value to others. So I think that is a really important aspect is you have to make sure that you're thinking about it the right way, because if you're not going to be confident. If you're thinking about, I need to raise $1 million for this deal or I won't close, that trepidation is going to come through in your conversation. So you have to really understand. You have to believe it. I mean, you can't just, you know, take this and run. You have to actually believe that you are providing real value. If you don't, you shouldn't start talking to people until you do. But if you're adding real value and you believe you're adding real value, then that will be the basis of the conversation. It'll be rooted in the value that you're serving up or the value that you're presenting and what that opportunity is. And then you can have a natural conversation where if you're getting pushback, now you understand what it is. You can say, well, listen, here's what the value is. It may not work for some people. Maybe they don't want the tax benefits, or maybe they can't take advantage of them. Maybe they, already have money deployed in other deals or other assets. So you have to understand what you're solving for and what the value is. And is this the right person that you're looking for? Maybe there's an education that needs to happen. Maybe they don't understand or they're not comfortable with the deal because they don't understand apartment syndication or they don't understand multifamily. So there's might be more education that needs to happen. So you really have to look at it from the investor's point of view as far as what they need and making sure that you're presenting it in a way where you're actually providing value to them in the first place.
Yeah, so sometimes I've heard that people aren't really as interested in the returns as much as if a problem is being solved for them. So when you're talking to investors or from the capital raising perspective, how do you get into the mind of the person that you're speaking to find out what kind of probing questions do you use in order to find out what problems you can solve for them?
Yeah, I mean, it kind of depends on who they are and kind of how we got connected and things like that. If they've already expressed an interest in investing, then part of what I'll ask is, well, what are you looking to get out of it, or what piqued your interest in investing? And from there, you might hear things like, well, I'm looking at supplementing my income. Or you might hear, well, I've got a lot of money in the stock market and I kind of want to diversify, or I'm a little concerned with where the stock market is right now. Or you might hear, hey, I'm paying a crap ton in taxes and I heard that I can, get some tax savings if I invest in multifamily. So, I mean, I think part of it is understanding the lens that they have. What are they looking at the deal as, or what have they heard, and then either affirming, what you offer based on that, or adjusting or giving your point of view on what your deals serve up. I actually turned an investor kind of down the other day. They came to me and they were looking at building a legacy and creating generational wealth. And I'm completely all for that. But with the approach that they wanted to do, they wanted to have something that they can kind of give to, their child. And our deals, we don't hold them forever. We buy them, we implement our business plan. They're usually 3 to 7 year holds, typically around a 5 year hold. But these are not deals that we're buying and we're going to be in them 30 years and everybody just passes on their equity or their share to their offspring. That's not how we do these deals. So in talking to that individual and learning what their real goals were, there were some other strategies that I thought were more appropriate for them. And as we talked more, we both came to the conclusion that, hey, maybe a deal like this will make sense for you in the future. But as of right now, I think you have some other options that may be better for you. So it's really understanding what they're looking to accomplish and then being truthful and honest about whether or not your deals are going to help them accomplish those goals.
Yeah, for sure. So tell me about how did you get educated in this arena? I mean, obviously you're learning as you're podcasting, you're talking to people, you're increasing your knowledge base. But when you were first getting started, where did you learn about multifamily? Did you go to one of the real estate camps or multifamily gurus to get educated or hire a coach? How did you get into it, or did you just do it organically?
Well, I mean, so I started with multifamily, right? Small, but I started with a duplex and three, then an 8 unit building. So I was investing in multifamily and I was
Mhm.
looking to scale into larger multifamily. And for me, once I made the decision that I wanted to start working with other investors, I realized it was really important to educate myself even further because I didn't want to, take money from busy professionals, people who are busting their tail to earn a living for their families and not fully understand why the success we were having was actually panning out that way. So I hired a coach and that coach had a lot of success, and in hiring that coach, it gave me someone that I could kind of have in my corner to ask questions and learn their processes and confirm some things that were working in our business and also learn some new ways and strategies to do different things in the way we were looking at deals and analyzing deals and things like that. So I think coaching is really important. I think sometimes, especially in real estate, and if you're a fan of bigger pockets, coaching or mentoring the guru thing becomes it has a negative connotation to it in some extent. And I do agree, I don't think you need to pay 40, $50,000 out of the gate to learn how to invest. But I do think that if you can be clear on what's holding you back from being a successful investor and figuring out how do you remove that hurdle, and if a coach is one of the ways to do that, you should seriously consider it. For me, I was ready to capital was the hurdle I was having, right?
Mhm.
We could find deals. I needed to be able to raise capital, but I was concerned about being able to nurture that capital in the way that was best for my investors. And I needed to go to other people who had done it and understand how they structured deals and understood how they raise capitals and manage investor relations so I could learn that aspect of it. So that's what we did. And I think that's something that people should absolutely consider. If you're looking to bring capital to deals and help other people, you have to make sure you're actually going to help these people and not hurt these people in the long run. So educating yourself and surrounding yourself with a credible team is really, really important.
Man, that's key. That's actually by chance. That's what happened to me. I surrounded myself with an amazing team that was already doing syndications. They've done 15 multifamily syndications, primarily in Arizona, and we want to scale our
Yeah.
business into new markets. And I basically was in a similar situation where I wanted to learn everything that I could about multifamily syndication because I knew that buying them one fourplex at a time was going to take me forever. And that's the only
Yeah.
thing that I knew from back during the crash. We were buying units here in Phoenix for like 20 grand
Yeah.
because one, the crash happened, so all of the real estate took a dip. In many markets, the multifamily didn't suffer as bad as it did in Arizona. And one of the reasons we had such a hard time is because there were some bills passed that drove all of the illegal immigrants out of here. So the renters just disappeared. Boom, all of a sudden we had vacant units all over the city, and we could go and cherry pick the best ones that had, the least damage that we could tenant occupy to fix up and tenant occupy as quickly as possible. And that's all that I knew. So once I actually had a partner, we split up. I left the country, came back, and wanted to do it by myself, and I could not figure out how to do it. I had mindset issues big time. Tried to get into selling multifamily because I wanted to work with investors as I made enough cash to buy some properties. But eventually, after telling people what my goals were, they said instead of buying 32 units or 32 fourplexes one at a time, why don't you just buy them all right now? And thus came the concept of multifamily syndication. So I interviewed people that were either coaching. I interviewed everybody, multiple coaches across. It's a small niche across the country even, but I interviewed a variety of coaches. I'm about to hire one. His name is Jens Nielsen. He's from Denmark and he's got around
Yeah.
200 units.
Yeah.
You know him?
Yeah. I've had him on the show. Great guy.
Awesome. So I'm super stoked to have him as a coach. We're gonna start in about a month. But so I have the pieces in place. I know that I can provide an opportunity to the team, or I mean to the investors. And what I don't know is how to raise the capital. I mean, I've had some random success doing YouTube videos to raise money for old projects, which is what my team liked about me is that I could do social media and that I was willing to do that for them. So with that being said, I want to learn the capital raising business inside and out. So I figure what better way than to start a show about raising capital? I
Yeah.
have people to talk about, and then along the way, I'll learn just like you have in your podcast. That's amazing how you've done that, man. I wish I could forward my life 2 years to see what it looks like at that point after doing the podcast. So
Enjoy the journey, though, man. Enjoy the journey.
yeah, man, it's going to be fun. So let's see. In regards to your multifamily business, how far do you want to grow it? How big do you want to get?
So it's a great question, right? I think it comes down to, and I just posted this on LinkedIn. I think most people who are looking to invest in real estate, any entrepreneur, you're doing it for one of two reasons. You're doing it to create the lifestyle that you want, or you're doing it to create a legacy. And the answer to that question comes down to if you want lifestyle, you need it manageable so it doesn't take over your lifestyle. If you love skiing or surfing or being home with your kids or taking 10 vacations a year, well, you need to create a business that allows you to do those things and doesn't take over your life. If you want to build a legacy, you've got to do the things that's going to allow this infrastructure to stay in place even after you're no longer involved running it, right? So I think that's really the crux of the question: is how big do you want to build it? Do you want to create a lifestyle company, or do you want to create a legacy company? For us, legacy is what we've kind of decided we want to do, with some lifestyle for sure, but
Hmm.
we want to build something that can last, where our kids can be involved, and they're taken care of, and they can continue to grow and run it, and or sell it, and I don't know, do their own lifestyle thing, but give them the freedom to do that. And not just the kids, but we want to build a business that helps other people. You talked about yourself and hiring my buddy Jens, and I think that's the important piece, right? Is how many people can you help? The amount you're compensated really comes down to how much value do you provide to other people. If you're providing great value to other people, you can get compensated for it. So part of that is figuring out how do you structure it in a way to do that. So you asked a direct question about how big do I want to grow, and I do want to answer that question.
Awesome.
I don't have a specific number. I don't have a number, because for me, it comes down to helping people. And I would like to help more people. I would like to help 1,000 investors um, buy and invest in real estate and take care of their families. So that's kind of the number that we're focused on. I'm not really focused on the number of doors or units or anything like that. But if we can help 1,000 individuals and help their families, to me, that's significant impact. That's generational impact. That's creating generational wealth. And I think that gives me a lot of purpose in my time. So if we can impact and bring on 1,000 investors and help them all invest in real estate and change the trajectory of their lives and create the freedom that they want, create the lifestyle that they want, to me, that's ultimately success.
Yeah, not to mention that every time that you help an investor get into real estate, you're making an impact on the community. You're helping residents have better lives, better places to live, and you're providing a great deal of jobs for all the real estate ancillary services, title companies, people that property manage, et cetera, et cetera. So all of that, it has a huge impact. I think it's a big deal to get in the multifamily business because of how much you have as an impact for people, and that's one of the things that I really love about it. It's kind of a big deal. All right, so tell me about social media. You think it's important or not?
Oh, absolutely. I mean, social media is absolutely important. Think about it. It's free marketing. If you use it correctly, it's free marketing for you. What you have to do is understand the algorithm on different platforms. We've played around with it a lot. I'm not really big into social media, but I know how important it is. So we're actually investing more time and energy into our social media platforms. But what works on LinkedIn may not work on Facebook. What works on Facebook may not work on Twitter. And what works on Twitter may not work on Instagram. So you have to understand the nuances of those audiences. And I would say, too, it goes back to value and what are people looking for, and how do you provide that value on those various platforms. So if you're looking at it from that lens, then you can be pretty successful in driving your reach. And if you're hoping to raise capital, again, that's what you're trying to do. You're trying to connect with other people. That's really, capital raising is really about connecting with other people, educating them about the value and the opportunities that you have, and seeing if it's a fit. It's really what it is. So you've got to find ways to connect with people, and social media is a great way to do that.
Okay, so in regards to, you think, so you don't have a specific goal of how big you want to grow it, but do you believe in goal setting along the way, and how do you apply that to your business?
Yeah, I mean, I think that there's different goals that we have. We just don't have like, hey, I want to do, yeah, I want 1,000 units under management. Like I don't really set goals like that, just because the number, like, to me, that doesn't solve anything. Like, my goals are more about the lifestyle I want to create, and we kind of reverse engineer what those numbers look like. Okay, well, if you want X amount of dollars in monthly cash flow, how many deals do you need to do to get there? Or how many people do you need to help to achieve what they're looking to do? So I think it's more about reverse engineering the lifestyle you want to create, and going from there. You asked another question, though. I don't know if I caught the
No,
specific.
that's it. Was you were kind of getting into a previous answer, but it was more about like your daily routine and how you get going. What is it? How do you determine what you want to focus on in a daily business, on a daily basis in your business?
Yeah, so you reverse engineer the goal, right? So we set, for instance, like one of our goals for this year, we've got what 3 months left in the year to accomplish this, is we want to acquire another 250 units. So we'll see. We just did 172 units, so we really need to acquire another 100. Let's just call it a 100 unit deal.
Mhm.
So with what do we need to do to execute that, right? We need to talk to brokers. We need to evaluate deals. We need to underwrite deals. We need to submit offers on deals. So we go through and we look at all the steps that we need to take. How many investors do we need to talk to? How many conversations do we need to have? How many leads do we need to have coming into our pipeline? So we reverse engineer those goals. And then basically we know if I talk to a certain number of investors or potential investors, a certain amount will actually invest with us. So it really comes down to understanding the numbers and what are you doing on a day-to-day basis to achieve those things. So on a weekly basis, we can review and say, okay, how many investor conversations did you have this week? Okay, you either had 20 25 investor conversations or you didn't. If you're low, you need to bring it up for the following week. If you exceeded it, okay, great, you're on your pathway. So you kind of have to reverse engineer that. What I would say is um, it's more about the habits or the routine than the outcome. I think too many people focus on, oh, I've raised X amount of dollars. You should really focus on how many conversations did you have? How many people did you meet? How many connections did you make? Those are the things that I think are really important to track and measure versus whether or not you got a commitment from an investor, because you won't know. And if you set your goals based on investor commitments, it's kind of like saying, hey, I want to lose 20 pounds. Well, that's a hard goal to set because the habits that are necessary to lose 20 pounds, they vary too much in between there. Versus if you say, hey, I want to wake up and I want to do 15 push-ups first thing in the morning and 10 jumping jacks. You can very quickly and every day measure if you did 15 push-ups and 10 jumping jacks. You can't really measure if you lost 20 pounds until, at the end of the month. You either lost it or you didn't. But you can understand it. Did you do the daily routines and the daily habits that would get you on the pathway to losing 20 pounds? And you can always adjust up or down based on the results you're seeing.
Yeah, interestingly enough, I'm in a 20-pound weight loss challenge through my CrossFit group, and I'm down
There
about
you go.
halfway through the process. And my coach is kind of telling me, dude, why are you eating some of this stuff? Like, you have to, because I'll be like really good, and then like one day it'll be really bad. And
Yeah.
I'm thinking in my head, I'm losing the weight over time, but like those daily habits that you're talking about, they're not established. They're just like, okay, I can do this to get my goal, but it's not about that. It's about creating the lifestyle so that I can do this long term going forward.
Yeah. Have you read Atomic Habits by James Clear?
I have not even heard of
I don't,
that.
I don't, I don't know if you're gonna ask me about my favorite book or anything like that, but I'm gonna jump the gun.
Do
And
it.
Atomic Habits by James Clear is a great book. It's a really great read. I'm in love with this book. I've listened to it twice, and on audiobook. I've ordered the physical copy of it, and it's what we're talking about. That's what this thing is really about. It's about those small, tiny habits, the small, tiny steps that really lead to big results. So let's just use what you just mentioned, the 20-pound weight loss challenge. Part of what it is we're making decisions, we're making choices or votes to be the type of person who makes healthy decisions, right? So every day you're making a choice multiple times a day to either be a healthy person or to not be a healthy person. So when you're looking at your meal options, you have an option to make. Hey, I'm going to make a vote that I'm a healthy person. I'm going to make the choices that a healthy person would make, or you're not going to do that. And you don't have to focus on the 20 pounds. It's, I want to be a healthy person. I want to live like a healthy person does, and I'm going to make a vote to be a healthy person. So you can sit there and in those moments of decision, you can track that. And when you don't make those decisions, sometimes what you want to do is just document that. Hey, you know what? I had an ice cream sandwich for lunch today, after lunch. Why? Why did you have it? How did you feel after you had it? What were the surroundings or the settings that made you make that decision versus the days when you were great, the days when you followed your diet or you went and worked out. And it's just tracking those things and finding ways to make it easy to do the good habits and make it difficult to do the bad habits. So going back to the eating, well, where are you going to eat? Are you eating at home? Are you going out to restaurants? If you're going to restaurants, what restaurants are you going to? Are you going to places that have a bunch of healthy options that you love and are delicious? Or are you going to places where they've got burgers and fries? So, those are the kind of things that every day it's the small little steps, the small little nuances that can have big impact. Going back to investors and raising capital, it's the same kind of thing. Are you talking to investors or not? Are you meeting people or not? You can't raise capital if you never have conversations with real people. So they're not just going to walk through your front door and throw their money at you. You've got to find ways to connect with them. So whether that's in person, whether that's through podcasts or blogs or social media, you have to have ways to connect with people, to engage with people and build relationships with them. And then once you have that initial one, all right, you got their email address. That doesn't mean, like, that's the first step. That's like getting a girl's phone number. Like, that's the first step. She's not going to marry you because she gave you a phone number. You now have to call her. You now have to take her out on a date. You now have to, there's steps involved to build the relationship. So you have to build the relationship. And those are the steps that you have to take. You have to treat it as such if you want to be successful.
Awesome. Yeah, man. I just recently got married, and you walked me through the whole process of how I got her on the hook and kept her and married her. But in regards to, I've heard you mention it various times, and I keep on wanting to ask you, but I don't want to interrupt you. The tracking part of your daily habits, what system are you using? Are you just writing it down, or do you have some kind of a system for measuring how many people you talk to, or whatever it is that you want to do? And do you apply
Yeah. So
that to your personal life as well?
Yeah, so if I could show you my big board, which I don't know what else is up there, so I'm not going to show you right now. But I do. I have one of my goals. I kind of write down how many people I want to touch and through what ways. So there's a certain amount of phone calls I want to make. There's a certain amount of emails that I want to send out. And there is, I don't have my glasses on. There's a certain amount of social media connections or interactions that I want to have. So yes, I do have a tracker. I'll be honest. I do not always look at my tracker or update my tracker to the extent that I should, but I do have a document that I can use and I can track and look at. So what I've been doing is kind of looking at it more on a weekly basis than kind of daily, but just kind of looking at it saying, all right, hey, really didn't have as many social connections as I should have had this week, or I didn't make as many phone calls as we should have had. But I think even acknowledging that part is still going to put you further ahead than someone who has no clue or is not even thinking about what the steps would even be. You know what I mean? But we're definitely tracking calls, emails, social media connections. And I would say, too, you want to have a CRM system. If you're going to do this and if you're serious about raising a lot of capital for deals, then you're going to need a CRM system because you're going to meet so many people. It's going to be very difficult to
Yeah.
keep track of everybody that you've ever met and what they're looking for and when did you talk to them last and what did you talk about. So creating a CRM system is going to be very helpful to help you do that.
What CRM are you using right now?
I use Pipedrive. There's a ton of different ones that people speak highly of. Contactually is one. Constant Contact. There's a few others that are really good. Active Campaign, but I use Pipedrive, and what I like about it is it allows it to integrate into my email system. So all my emails are actually in Pipedrive, so I can email directly through Pipedrive. It tracks every email, so I go in there. It'll track my last communications with them. I can hard code phone calls. So if I call through the pipe drive system, I can do calls. It'll log that. If I have lunch with someone, I can log that activity. So I have kind of a track record of the different interactions, and then I can plan. So if there's a broker or someone I want to stay consistently in front of, I can give it. I can have it basically buzz me once a month and say, "Hey, make sure you talk to this person once a month." And that way I can make sure I'm staying top of mind with that individual and kind of standing out.
Oh, I look forward. I'm going to check that one out because I know that we have a CRM at the investor relations guy. His name's Dave Sherman at Bakerson. He's got a CRM, and our marketing manager's got a CRM. And then I want to have my own CRM as well because I'm not totally plugged into that one. But now, one of the things that you mentioned, we already established that social media is important, but you're actually tracking the people that you are connecting with. Are you talking about specifically LinkedIn or all of the platforms together? And what are you doing to leverage those contacts or create the ability to connect through those contacts?
So I think it's important to have a social media strategy, right? I mean, otherwise you're just on social and it's very easy to get distracted. And next thing you know, you're just scrolling, right? You're just scrolling the news feed, looking at pictures, double tapping, liking. and you're just on social media. You're not really using it for business, you're just on there looking at stuff, right? And you can go through a time warp where you spent half an hour and you really didn't do anything that would drive your business forward by being on social media. You just like some pictures or like some posts, right? So I think the first part is having a strategy. That's really important to understand how you're going to use social media. For me, the most important thing is getting someone into our email database. So whenever I'm on social media, part of what I'm trying to do is, yes, I'm looking to connect with people, but I want to transition that connection into at least an email, but really a phone conversation. The reason email is so important, and I want to make sure listeners hear this. The reason an email is so important is you get to control that database. On social media, I can make a post and I can't control who actually sees it.
Yeah.
These algorithms now, I mean, they have it where only a quarter of the people in your that you're connected to actually see your stuff. If a quarter, I mean, you have 1,000, 1,500, 2,000 people you're connected with, and you make a post and you get 3 likes. I'm sure that's happening to people. People aren't seeing your stuff or something that they don't deem is valuable, so they're not even showing it to people. So you don't control that. So the key is you have to get the power of the relationship off of the algorithms. Don't let Facebook determine who sees your message. Get that conversation to email, and then you control how frequently you connect with them, what message you send to them. And then ultimately, if you're raising money, I know before we hit record, we talked about the SEC and regulations and things like that. Well, you can't post deals that are 506B deals on social media. So how are you going to tell people that you have a deal? It's going to be through email. So you might have met a great potential investor, but if you don't get that relationship to email, it's going to be difficult. Again, if you've got 2,000 people in your Facebook, world, you can't tell those 2,000 people you've got a deal. You got to transition those things to email. So the biggest thing is building up the email database and quickly trying to transition those relationships and those conversations to your email database.
That's good advice, man. I want to focus on the email stuff. I actually have a campaign that leads to what you said the goal was, which is a phone call. I hired a company here out of Scottsdale that's doing a marketing campaign for me, and they're reaching out to people and putting them right onto my Calendly link. So they schedule time for me, and every day, like today, I think I have 4 or 5 calls with people I've never met or known before. So that's the exciting part, because sometimes I run into people that are interested in passive investing, other people that are interested perhaps in doing a co-GP, other people that have access to off-market deals. And depending on what kind of contacts I have, I plug them in where they best fit, whether it's the acquisitions manager at Bakerson, or in some cases, there's people that I can't help whatsoever, but it's still nice to connect. Like I had this conversation with this guy. He was a multifamily investor, and he saw the message that we sent out on LinkedIn, and he's like, dude, I hate people reaching out to me on LinkedIn. Like, it drives me crazy when people want to just help me, generate more leads for my real estate business. And, you know, he mentioned the word hate probably like 7 or 8 times. And later on, it turned into more of a spiritual personal development type of communication on this phone call. And I said, I'm not sure if you're listening to yourself the way you speak. And maybe one of the reasons you're in a rut is because you have this specific energy that you're focused on. Like, I hate this, I hate that, I didn't like this, I thought these people were shady. And I'm like, just listen to yourself. And it became like a conscious uh, you know awareness type of thing of what you're doing. And he's like, how do I get out of this rut? And like the first thing I told him is like, man, how about you just forgive yourself and you love yourself, and focus on the things, like write down what your goals are, write down a description. If you're having problems with dating, write down a description of your perfect woman, and then start praying from a place of gratitude as if you've attracted the things that you already want to get into your life. And like, I had no idea that this LinkedIn phone call was going to go in that direction, but like it made a big dent, or I mean, a big change in his day. And me, they always say that the teacher learns more than the student. And like, me saying these things had me honing in on the things that I need to focus on in too for my own relationships. It was very powerful, like how you're out there doing business and networking, but then something can turn completely different. And those conversations are so memorable. But I really love that aspect of networking and taking the people on social media into a relationship and a conversation, because that dude's not going to forget me. And I'm not
Right.
going to forget that conversation either. So that's a lot of fun. So I'm gonna check out that CRM that you said. I think you said it was Pipeline or Pipe Drive.
Pipe drive. Yep.
Okay. So what else? Let's see. You have 700 units. How about this? How about we end the call on this? Why don't we do a little bit of a case study on one of your favorite deals, how you acquired it, how you found it, how you put your team in place to take down that property, and then we'll leave it at that. And then, just give your contact information. I'll ask for it at the end and prompt you. But walk us through one of your deals, and give us a case study on it if you don't mind, if that's possible.
Yeah, absolutely. So our business way is set up, we have two verticals, right? So one vertical, we kind of basically lead everything. We find the deal, we get it under contract, we, bring the capital and we kind of manage all aspects of it. The other side of it is where we align with another operator. They find the deal, they get under contract. We help with market analysis and, marketing information. We help bring capital. We help with investor relations and things like that as well, right? So to give you an example, I'll use a quick one from both sides. On the ones where we lead, we got a 28 unit building out in Cincinnati, and we had been building relationship with brokers for a while and just staying in touch with them, reaching out. I actually saw a property that was sold on LoopNet, and I reached out to the listing broker and said, "Hey, listen, I saw this is under contract. If anything happens, I'd would love to take a look at it and see if there's something that we could fit, but it fits what we're looking at." And he said, "Hey, no, I think that money's going to go hard in the next week. I think we're going to close, but I'll keep you in mind." I said, "Well, listen, I'd love to just learn more about you and kind of stay top of mind." I think I sent him a card or something like that, an e-card, and he had just had a baby, and I think I sent him an e-card, and we had another phone conversation about a month later, and he confirmed that that property had closed. And I think I reached out one more time, maybe about a month or two later, and then he had a deal, the similar size property, similar size deal that came on, and he sent it out to a handful of people. I was one of them. At least this is what he told me. He told me he only sent it to 5 people. And it wasn't like a CRM thing, so he actually had to physically email. So I'm sure he didn't email a whole bunch of people individually. And I reached out to him and said, "Listen, it looks like it fits exactly what we're looking to do. I can get somebody over there tomorrow to take a look at it. And if it looks solid, then we'll move forward." We did that. We decided to put in a pretty strong offer, and we got that thing under contract before he even listed it. So that was a 28 unit deal that was all about the broker relationships and, staying present, staying top of mind, and making sure you're building those relationships. So that deal we own and operate, and we've been kind of renovating that and getting that thing stabilized and situated. Another one is the first deal we talked about, the 192 unit. On that deal, there's another operator, and we have been building relationship, and we just simply reached out and said, "Listen, you know, trust you, like you, we've built a relationship. If you find something where we can add value to you, I'd be open to doing that." And he reached out and he had a deal and he said, "Hey, I think we're good right now." Well, last minute, he had $1 million of a gap come up because they had a large investor, but that investor wanted to change the parameters of the deal. So at that moment, he called me and said, "Hey, listen, are you still interested in coming in and helping us out?" And I said, "Absolutely." So at that moment, we kind of partnered and we did some more digging on the market. We provided, kind of an analysis. We helped with some other things from a marketing standpoint, the investor relations, and then obviously bringing some capital to the deal as well.
Actually, I have one more question. Have you ever focused on reaching out to other sponsors and maybe looking to do some kind of a or a collaboration with them? You ever take that approach in order to grow your portfolio?
We haven't. We do have a new partner that I'm super excited about on the deals we're gonna be doing going forward, where and he kind of reached out and we've talked to each other a few times, and we're gonna do some deals together moving forward. And that's something that again it takes time. It's back to relationship building. We've known each other for probably a year and a half or 2 years now. And he's seen what we've done and what we've been building. I've seen what he's done and what he's built. And we've basically said, "Listen, I think there's some stuff." And other markets that we can do together. So that's what we're working on right now. And I think again, it comes down to relationships and being a trustworthy person. And you know, I try to be as straightforward as we can, as far as the law allows me to be, and share information. I think that there's a lot of people who value that.
John Casmon, my man, thank you so much for coming on the show. Why don't you tell everybody how to get a hold of you and where you can be reached?
Absolutely. So you can email me at john@casmoncapital.com. I'm on most social media platforms, primarily LinkedIn and Instagram are the two I'm on most. I am on Facebook, but a little less active there. And then for your listeners, if they're interested in multifamily investing or what a deal looks like, we actually do have a sample deal package on our website right now. So they can go to casmoncapital.com/sample deal and they can download that and get a sense of how a deal is structured, the kind of structure that people use, how we like to look at our deals, the way a package is actually put together. So you can take a look at that, and that may help you just get a little bit more comfortable with the way deals are put together there. And you'll also sign up. You'll be on our list for tips like this. So if you've got any good value out of our conversation today, we're sharing these kind of tips in our newsletter as well as exclusive investment opportunities as they come up.
Nice, man. Hey, are you coming out to the West Coast at all?
I am. I'll be in Denver, I think, in a few weeks here. I'm supposed to be out there for one of Adam's event, Adam
I'm going
Adams.
to that event, man. We should grab a
All
coffee.
right. Yeah, yeah, yeah. I have not bought my ticket yet, so I need to do that ASAP. But I will be planning on coming out there for that. And I think there's something else that I should be coming out there for in November out in LA. So I won't be in the Arizona area for anything specific, but I will be out on the West Coast.
No, just over in this area. Yeah, because I'm going to the Adam Adams events, specifically on raising capital. I'm heading up to Minneapolis for Todd's event.
I'm planning on being there too. So there you
Oh,
go.
there you go, man. Opportunity to rub elbows a couple times. That's fantastic. All right,
Yeah.
man. Well, I'm going to sign off. I thank you so much for coming on the show, man. You provide incredible value, and you're super smooth, man. I hope I get there one day.
Thank you, Ruben.
Fantastic.
Hey,
Yeah.
man, I know you're starting out on the podcast, but stick to it, man. It's one of those things where, starting out is always a little awkward. You're always a little, it's something new, right? It's what is new. But I think what I like and most about what you and what you're doing is you have to be willing to put yourself out there and be a little vulnerable, right? You have to go through that process and you'll get better and better and better and you'll get sharper and you'll get smooth and, to roll off your tongue. And that's the fun, man. You just go through the process and ultimately you'll get to a place where you're like, man, it's fun, it's easy, it's great conversations, but you'll enjoy it, man. So stick with it, and you're having a lot of fun, and I know your listeners are really enjoying what you're building for them and the value that you and your guests are providing for your audience.
Awesome, John. Thank you so much for the kind words. Thanks for coming on the show. And we'll touch base in Minneapolis and Denver, man. Have a good day. Thank you so much.
Take care.
All right, man. Take care.